If you were to find a winning crypto strategy that has proven success, we have taken the time to backtest thousands of hours on multiple different crypto coins. This could become one of the best trading strategies you have ever used. This is the smart money formula. My guarantee is that after watching this video, you will never trade the same way again. In this training, you will learn the winning trading formula that's overlooked by 90% of traders, how to identify the most important trading pattern in the markets, and how to use this pattern to create the most successful trading plan. I want to reveal to you the most important pattern in the crypto markets. You absolutely need to know this if you are a trader. The master pattern is the ultimate trading pattern. It represents the three market phases: contraction, expansion, and the trend phase. This pattern is happening on every single time frame and in every financial market. Most traders will never even spot this pattern. Why, you may be wondering? Can you see anything on this busy chart? This is how the average trader's chart looks like. You've got some trend lines in here. We've got some horizontal lines. We've got EMAs. We've got a whole montage of indicators overlaid over each other, which actually prevents you from seeing the chart accurately and clearly. Stop cluttering your charts with a million indicators that will only confuse you. Most indicators lag and repaint. Therefore, you only get the valuable information when it's too late. Traditional indicators and commonly taught technical analysis only serve to mask and hide this important pattern. This pattern is happening all of the time. This pattern affects everyone, whether they know it or not. This pattern gives you an exact trading plan that never changes. This pattern is the system of the market makers and how they trade. 90% of traders lose money because they do not understand this. Money moves from the masses to the smart money through this pattern. These are the three important market phases. You get the contraction phase, number one, the expansion phase, number two, and then the trend phase. You want to look for contraction, you want to find the expansion, and that's the signal to get ready to trade in the trend phase. I'm going to teach you a methodology on how to interact with this pattern in a hugely accurate way. First, you must understand this important concept. Behind every trade placed in the market is a trader who believes they are going to win. The markets are belief driven. The current and future price predictions are determined through the beliefs of the traders participating. It is beliefs that must be analyzed and not price. This is why most indicators do not work, because they are focused on price and not belief. These are the three market phases: contraction, expansion, and the trend phase. These three phases complete a full three-phase cycle, which allows you to have a deeper understanding of the movement of the market. Number one, we get the contraction phase. This is the first phase. This is where we get this low institutional volume, and we get a simultaneous lower high and higher low happening in the charts. Our software will draw a box around this, and it will let you know the contraction has started. You don't need our software to do this. You can manually draw it on your charts, and you'll see you get a lower high, higher low, and this is where you draw a box. So the first place you spot this on your charts, this represents a squeeze happening in the market. You can see over here, we get the lower high, higher low, the box is formed, and then we get this value line produced out of the box, and you can see you get price whipsawing around this line. It absolutely respects these levels. These contraction boxes help you define expectations of upcoming market behavior. It serves as an incoming volatility signal. It also provides you with the starting accumulation point of the market makers. These contraction boxes are the basic building blocks of all market framework that dictate future price movement. Here's an example. You get the contraction box, contraction phase, and then what comes next is the expansion phase. That's what lets you know the volatility is starting. And then we get phase number two, which is the expansion phase. After the contraction phase, it lets you know expansion's coming next. Once we go into the expansion phase, we get this whipsaw motion happening, which is the exact phase where most traders get taken out of the market. It is the manipulation phase. Now that you recognize this pattern, you can look on your chart and you will spot it everywhere if you use this technique. Contraction and expansion. This whipsaw action is designed to liquidate the mass traders so that the market makers can fill their liquidity with all of their orders. This whipsaw ends up breaking the highs and breaking the lows, which allows them to access this liquidity at your stop losses. These expansion lines are the dividing point between the buyers and the sellers and is relevant to the time frame that it's being observed on. They provide exact price levels that make up the underlying framework of real buying and selling dynamics and give specific price where the market sentiment can change. Above expansion is increased buying and below expansion is increased selling. This provides predictable information. And then we have the third phase, which is the trend phase. This is the money-making phase. After we get contraction, we get this whipsaw expansion phase. After the whipsaw phase, then the smart money settles in a direction and moves price higher or lower. These are the three phases in more detail. So you can see after contraction phase, we get the expansion before price goes into the trend phase. The smart money is always positioning against the dumb money. The dumb money are taught to read moving averages, Bollinger Bands, all kinds of random indicators. What they don't realize is you are not trading against lines. You are trading against people. You need to understand how people's beliefs are going to be manipulated. This pattern is the footprint left behind by the market makers' activity and how they do business. Let us now dive into the strategy of how to trade with this indicator and this system. This strategy is super simple. If you look at the chart over here, first let's look at the short market. We've got two different indicators that we use here. We've got this fair value gap trend line indicator, which is known as imbalance X, and we've got indicator X. Both of these are price action indicators. So the first step in this formula is we look for the higher time frame bias. You can use a 4-hour, 8-hour, 12-hour, a daily, depending on your trading style. In this example, we're using a 4-hour, and you can see price is below this higher time frame value line, and we get a red bearish fair value gap dot, which shows us now that we're going into a bearish phase. Once we've confirmed a higher time frame bias, we go to our entry time frame, which is the 5-minute chart, and it becomes super simple. We are purely looking for short positions. When price is above these lower time frame value lines, indicator X shows you the best places to enter your trades with the lowest amount of risk, and we use a 2 time frame setup for this strategy. Let's look at a long market now. You can see over here, we've got the 4-hour chart, which is for our higher time frame bias. You can see we got a green dot and price is just above this value line. That can be the signal to start looking for your long positions on the lower time frame. We jump onto the 5-minute chart. This is our entry time frame. Every time price is below the lower time frame value lines over here, these red lines, that is a place you start to look for a long entry. This strategy could not be made any more simple. Number 1, high time frame bias, and number 2, lower time frame entries. So this is the basics of how this strategy works. But now let me take you onto the chart. Let me break down a real trade that I took, 146%. I'm going to break this trade down for you. I'm going to show you exactly how I was able to achieve this win. Let's have a look at Vanry USDT. This is the token that I had a very successful trade with. I'm going to show you exactly how I was able to achieve these results. So first of all, I'm using 2 time frames. You can see I've got the 8-hour time frame as my higher time frame bias, and I'm using the 5-minute time frame for my lower time frame entries. I'm using 2 time frames for the strategy, a higher time frame for our bias to understand what is the direction of the market, and then the lower time frame for entries to get those precise sniper entries into the trade. So first of all, we start on the higher time frame bias, and for the higher time frame bias, I'm using a very unique indicator called imbalance X. Imbalance X is a fair value gap trend line indicator that's designed to detect candle separation, which helps you understand when there's incoming volatility coming into the asset, which shows you if it's going to be in a bearish market or in a bullish market. You can see over here we got a green dot. When we get the green dot dot on the higher time frame. This is a very strong confirmation that a bullish sentiment is starting. As you can see from when we got the green dot, we just had this bullish fair value gap trend line and it continued to stay bullish for a while. If we're to look at price action, you can see here, this was a resistance point over here. This point, one resistance point, and then it becomes a support. So this is what we call a flip zone. When we get these flip zones that occur within this price action analysis, on top of using our imbalance X indicator, this gave me a lot of confidence in understanding the bias of this asset, and I was purely looking for long position. When I got to the chart and I was looking to enter the trade, price was round about here, and this is precisely the location where I started getting interested. You see, once you are confirmed on the higher time frame bias, like we are in this example, we're confirmed looking for our long entries because we've got this bullish fair value gap. That means I can confidently now jump onto the lower time frame, and I'm only looking for long entries. Here I am now purely on the lower time frame. As you can see over here, guys, I've got this fair value gap dashboard in the corner, which is going to help me keep track of what is happening on the higher time frame. It's letting me know what is happening on the daily, 12-hour, 8-hour, and 4-hour, which is giving me an understanding of what is the sentiment of the higher time frame based on fair value gaps. This gives me confidence now in my trade. Then I'm using the second indicator for my entries. I'm using indicator X. Indicator X is the ultimate contraction tool that you'll ever use. It detects 3 levels of contraction: 2-bar contraction, 3-bar, and multi-bar contraction. In this example, I'm going to be showing you the multi-bar contraction. And for this example, I've turned on only the major master patterns. I've turned off the minor and I've turned off the origins. And then I'm just going to put on the liquidity lines. So there you go, guys. You can see the master pattern is showing every time we get these red boxes. This is showing us where contraction is starting in the market. You can see we've got a red box over there. We've got a red box over here. And we've got a red box over here. Since we're on a 5-minute time frame, the 3 phases play out much faster, which gives us many opportunities to get super precise entries. And this played out exactly how I explained in this video. You can see we get phase 1, which is the contraction phase. And then we get phase 2, which is the whipsaw. Look at this, perfect whipsaw. And then eventually it will go into the trend phase. So once we've determined our higher time frame bias, you can see over here, you can see this green line. This is the green fair value gap that's based on the 8-hour time frame. Guys, imbalance X is a multi-time frame fair value gap detector. So we can set it to be on the 8 hours, can keep you in alignment with the trend direction. Another feature we've added is color candles. So we can turn that on, and what it'll do, it'll color all the candles green. There you go, which will also help you understand, are you looking for longs? Are you looking for shorts? And keep you in alignment with this specific strategy. This line over here is precisely the place where I started getting interested looking for a trade. All I was waiting to do now, because all our confidences were matching, the higher time frame bias was confirmed bullish. As you can see, it's a green playing out here, and we've got price above this fair value gap. Now, all I'm looking for, guys, when we're looking for long entries, we're only looking to go long when price is underneath these value lines. Can you see this over here? This over here is the value line, and price oscillates around this value line. This is giving us the exact framework of where's the best places to look to enter your long positions. When price is underneath this value line, that is precisely where we want to start looking for longs. But to get more details, we open up our third indicator that I use for this strategy. It is known as the TDIX. The TDIX is based on multiple indicators that help us give us more accurate data. This is not our leading indicator. This is our companion indicator that we use with Imbalance X and Indicator X. As you can see over here, guys, this is precisely what I was looking for. The 2 confluences we look for, we either look for these shark fins where we get this white RSI break out of this Bollinger Band, or where we get the dots, which is a super shark fin. This shows us a high probability of reversal. And then the second highest is we look for these divergences. Divergences also confirm our entries. So you can see over here, price is below the value line, which is our place where we look for an entry. Plus we get a divergence, which happened precisely around here. So this was the area I looked to go into. I got into this trade a little bit late, so I only entered a little bit higher up and I didn't get as close as I wanted to, because you can see here we had a perfect reversal candle showing as well. This is a Morningstar candle, which is also one of the confluences we use and teach within Easy Algo. So you can see, guys, this was a perfect trade. The three top confluences all tied in: higher time frame bias showing bullish, lower time frame price below the value line, and the TDIX showing us a divergence. When you combine these three signals together, it gives you a highly accurate winning rate. The best places to place your stop loss is going to be underneath these risk lines. These fair value gap lines also serve as risk lines, and they give you the safest place to add your stop losses, where price has the least chance of retracing to. You can see this was my exact setup over here, and this was exactly where I exited the trade. There were probably even more entries if we keep looking. Every time price was below the value line, here would have been another entry. Okay, this was very tiny, but price is below the value line. Price is below the value line over there, over here, and this would have been a fantastic one. So you can see, guys, look how many more entries we could have gotten. 1, 2, 3, 4, 5. If we keep going, you can see this would have been another amazing entry over here. This potentially would have been an entry over here as well. And you can see, guys, look, we got divergences adding up on the TDIX over here. This would have been a fantastic entry. And then look, guys, price just exploded from this point. This is where I ended up taking profit, because this was a higher time frame liquidity line, which is usually the best places to target. You understand the higher time frame bias, you trade accordingly with that on the lower time frame using indicator X. All you simply do is you wait for price to become underneath the value line in combination with these shark fins. Look over here. Look at this, guys. Look at this perfect shark fin over here. Price is under this value line. This would have been an amazing trade. We also got a shark fin over here. Can you see shark fin happening? Plus price is under the value line. Over here, look at this, guys. We get a divergence happening. Price is below the value line. So these three trades, guys, these three entries would have been all winning trades, guys. If you guys want to test this strategy out, click in the link below. We offer a free 3-day trial where you can test out the systems, test out all the indicators, join some of our live trading. And I can guarantee you guys, this strategy will take your trading to the levels that you've wanted to trade at.